Hey, it's Sasha Evdokov, and thanks for joining me on Traders Fly TV. Today we're going to discuss the three parts to a stock trader's portfolio. Now, in this segment, what I want to discuss is that there are three main sections to a stock trader's portfolio, and the first one being speculative. You have speculative trades, the second one is monthly income trades, and the third one is you have long-term IRA or investment trades. Now, you have these three different types of trades because you want to balance out your portfolio. Speculative is things that you're looking for on one direction or another. Monthly income is something that's a little more consistent. And long-term IRA investment trades are, again, a little bit more long-term, but also for the long haul for your retirement. Now, when you're trading and you're looking at the speculative trades, usually they are directional in nature. So for example, if I'm buying a certain stock at 50, then what I'm looking to buy or what I'm looking to get out of the stock when it's a directional play is I'm looking for it to either to go up or to go down. And I can do that either through buying shares of stock or selling shares of stock, whether I'm long or short the stock. Now, it can be for just a day trade only, meaning you hold it for 5 minutes, 10 minutes, an hour, or just for the day. Or it can be for a swing trade, meaning for multiple days to allow the stock to run. Now, personally, I recommend swing trading rather than day trading because there's only so much you can do in a 6.5-hour day. However, the speculative trades are the easiest to understand, but they are difficult to get right because you got to know the direction. You got to know which way it goes. And if it doesn't go in your direction, then pretty much price is the one thing that you're trying to account for based on your stops. So speculative trades are a little bit more tricky to execute, if you're not understanding the volume, the price, the action, and the behavior. Now, as far as monthly income trades is money that you make every single month from option deterioration, which is your theta if you know the Greeks. Now, trades such as iron condors, butterflies, and calendar trades work really well for monthly income trades. You put those positions on and you let them run for, 20, 30, 40 days, and, you let your theta or options deteriorate, and then, you purchase them back or sell them later and collect your theta or collect your income. So that's why they're considered monthly income trades. Now, they're not always profitable each and every single month. Over the course of a year, you may have 2 or 3 bad months. Maybe you have 4 bad months. But the point is that over the lifetime of monthly income trades, you should have, let's just say 6, 8, 10, or maybe 11 very profitable months. And as long as you can keep your risk to the downside or losing months a lot smaller, you'll be okay. And as a tip, stick with the same vehicle, meaning stick with the same stock or stick with the same ETF. A lot of people, when they get into monthly income trades or even speculative trades, they start trading in and out of, let's just say 1 week they'll do Apple. Then another month they'll do Chipotle Mexican Grill. Then another month they'll do Netflix. Then another month they'll do the Spiders. Then another month they'll do the Dow Jones or the diamonds. So what you want to do is month after month, stick with the same vehicle and slowly tweak your strategies. Over time, it's going to get boring, but you'll be very consistent in your nature of doing monthly income trades. Usually I use these for retirement accounts, but you can use them for also your regular and standard accounts as well. And finally, the long-term holdings is the third part to your portfolio, or it should be. Usually, again, it's more so for the retirement accounts. It could be for your kids' accounts, could be for a 529 savings account. It can be for a lot of different things. But long-term holdings can be stock holdings, or it can be options such as diagonal, in which case you get better yield. Because remember the nature of the game. The name of the game comes down to yield. Okay? Now, the main question then comes down to how to allocate your portfolio. Well, remember, the market will have different environments at different times of the year or at different times within a decade. So you have to adjust at different times for different strategies. So at different times you may want to do more long-term positions, and sometimes you may want to do more speculative positions. So what you have to do is watch the environment and learn to do a few different strategies to profit from the market in various conditions. And then sometimes it's just better to just sit out. And unfortunately, that's just the nature of the game. There's times where you might want to sit out for months. There might be times where you might want to sit out for just a couple weeks. But you have to set up and watch the right environment that's good for you and your style of trading and your risk and reward strategy. You have to come up with a plan for yourself, because the person that's going to care about your money the most is going to be you. Nobody else is going to care about your money as much. Not those brokers, not the hedge fund managers. No matter who you give your money to, they're not going to care about your money as much as you care about your money. So keep that in mind. Think about all those Ponzi schemes that go out there and happen, and all the huge companies that fold or roll over. You know, talking about GM or AIG or Lehman Brothers. All those companies, you know, they don't care about your money. You know, so you have to do your own homework and do your own research. That's the person that you can always rely on for managing your funds. In either case, those are just some tips when you're trading. Remember that there's different parts to your portfolio, and when you're managing your trades and when you're looking to get into certain trades and certain things, then you have to keep those three parts of a portfolio in mind when you're trading. You'll have some speculative things, you'll have some long-term trades, and you'll have some income trades. Those are the three parts, and that's what you got to focus on when you're trading, because you want to diversify, you want to mix things up and have every part of your trading portfolio working for your benefit. All right, I'm Sasha Evdokov. Thanks for watching, and remember to do what you love, contribute to others, and most importantly, live life abundantly. See you next time.